rate increases and the unfairness to a lot of clients that who have never had tickets, accidents, or even claims in the past, and now they have to share equally the rate increase because of the whole, state, the whole country. A lot of the states could relate because it's not just limited to California. It's just gotten out of hand to where it's been annoying me personally. A lot of customers from every company, there is not a single client out there with their current carrier that is upset about, a price hike. A lot of people are shopping around. People shop around all the time because a 20%, 30% increase. We're seeing higher rate increases in certain markets. It's the bigger cities are also being affected with a lot higher than some of their counterparts in those in much smaller, localized, rural cities. As not to say that they can't be affected. They can be as well. They're also in the mix, but it may not be as much as their Los Angeles or San Francisco. You're going to see a lot higher in those areas or metropolitan areas, if you can put it that way. So yeah, I actually can go on in very depth on the whole subject. It's kind of annoying because I've talked to a couple of people and it's like, it's not just like insurance hiking it out of no reason. It's influenced by a variety of factors that the cost of insuring vehicles, the cost of parts, the cost of repairing the vehicles, and or the cost of now their vehicles are worth a little more. So now they have to raise the insurance rates in some markets. But all of that can be traced back. I already know where it traces back, but it's not going to change anything. At the end of the day, history is already cemented. The only thing you can do is just what you're going to do from an idea of what the solution could be. And kind of what I've been brainstorming through my mind is a part of it is going to have to be regulation. Regulation is going to have to be changed and adjusted to currently where we're all sitting at, because the smallest fender benders can cause the biggest nightmares for clients, and they don't understand that. And so it's those small things that can create a big nightmare, to where it's like, how are they claiming the other party that they got injured, that their back hurts, that their head hurts, their neck hurts, when it was just the slightest little fender bender, like barely tapped the car. And now the client who barely tapped the car is now having a hard time finding insurance elsewhere, because now it's classified as a major accident or as a 2-point accident. You are having a hard time finding insurance elsewhere. The market is where it is right now. And so it doesn't seem fair to those clients for a one-time accident, one time, that everything that they built up historically with that company could be jeopardized and out the door. And so it's like, now you put the client in a worse position, unfortunately, because of those regulations and laws that allow certain people to abuse of the system and abuse of that insurance part of it, just because, oh, I'm going to go get money, because that person hit me. Unfortunately, there's that ability for people to do, and they take advantage of it. And so we all kind of get an idea of who those kinds of people are, because if it's a decent person, normally they're not going to try to screw you over like that. It's like, oh, no big deal, just fix my car, call it a day. But unfortunately, that common sense and trust in people is gone. It's not like what it used to be 20, 40 years ago. So I get that part of it, but the laws have not really adjusted since then either. So we need to adjust those kinds of laws and regulations to try to at least help clients and consumers out, because it's actually hurting them. It's either we adjust that or we adjust the insurance ratings to try to adjust and accommodate accordingly. But easier said than done, because that requires a lot more of having to really change and how to make it actually work. So I would say that the regulations and laws behind it should actually take charge to try to influence that part of it. And some people might argue like, oh, well, insurance companies have so much money and, they should always be paying out, like they're a big scam, and arguments behind it. But at the end of the day, it's there for a purpose. It's not, some people who are like, oh, I've never had insurance and I'm perfectly fine. I've driven without insurance for 10, 20 years. Like, good. That's on the day. I'm still going to have that coverage because I want my car to be fixed. I have insurance to have my car protected. including myself, if I were to get injured. And there's a lot of misconceptions behind it, and some people just have their beliefs just rooted in between them in their mind. And it's like, good, I'm not going to change your mind. You do you. That's on you. You've been doing that 10, 20 years. I'm not going to even attempt to change your philosophy idea behind it. The partially that's going to be one part of the solution. The other part of it would be starting a company that can actually figure out a not just a short-term solution, but a long-term solution. We can potentially navigate those rates between clients. And what percentages that would look like, we'll have to kind of cross that bridge. If that's something that we would do, then it can be done. That's another, we're going to have to cross, like these solutions are going to have a counter argument, and it's going to be part of the regulations. So all these potential solutions, I have to think about, okay, what is the state going to say? What are the laws going to say about that potential solution? So I have to address that. And for that to happen, it's like a lot of thought into it. So dividing rates between a pool of risk for people who drive that bad, for example, or who have a really bad driving record, they should be divided equally between themselves. The clients who have really great driving records, never had a ticket, never had an accident, we should try to at least negate, but we should at least defer, any potential rate increases for them because of their one, hopefully the loyalty, two, clean driving record. We should see it as a less risky pool per se. And so how could we accomplish that without creating a division of unfair and unequal to California consumers? Because California law states that you have to treat everybody equally and the discounts have to be applied equally. And so I'm for protecting consumers, but there has to be a way of helping the consumer at the end of the day that also benefits them, because we're sharing the rates increases equally 20, 30, 40%, even 60, 80% in rare cases. How is it fair for the client who has the best clean driving record for them to also get hit with a 40%, yet your counterpart with a bad driving record is getting hit with a 30%? The people who regulate the industry would be like, well, that's the company's fault for doing that. And it's like, I mean, I get it, but there has to be a better way. It can't just be like where it's like 20% or 30%. Now it's equal, but it's unfair to the actual client who has a clean driving record history, no ticket, nothing. Like if you had have been with the company for 10 years, no claims, no accidents, no tickets, all of a sudden you're paying, let's say you're paying $250, now your bill's $320 out of the blue, just because rate increases without any additional added benefits to it. Like, how does that make you feel? Wow, what the hell, like $67 increase for no reason, and I'm not getting anything else out of it. As a consumer side of it, it doesn't really make a whole lot of sense, and it's not fair, because now the explanation you're probably getting from that insurance company is be like, oh, well, it's just a rate increase we have to share, or the loss changed everything. But that's a bunch of bad. Some people are like, well, that's not fair. Or, you get a variety of responses. And so if we were to have to implement that, like maybe let's add a benefit. And I want to bring a little bit of the credit card industry world of, annual fee increases periodically, and they add benefits. So some may not be as useful as others, but in this case, in the insurance world, what if we do for example, let's say your policy has towing and roadside, instead of it being, let's say, a 20-mile radius, let's do a 50-mile radius. So if your car gets disabled at home and you're like 50 miles away, don't worry about it. It's complimentary. We'll cover it. Your policy currently states 20, but at the rate increase, we'll do 50 miles. Figure something else out, add more benefits to it. But I have to that's going to be partially a solution towards if we have rate increases and if we have to go that route, maybe we can do it as minimal as possible, like for every $100, maybe $3, $4. That's easier to stomach than a 40% all of a sudden. For every $100 now it's $40 more. And so there should be a better way to approach it. In California, this is another thing we have to address. You can't just price hike or rate increase clients out of the blue at will. You have to go through the insurance Department of Insurance, file it with them, and wait for approval. And so Once you do that, then and if you get approved, then you can rate, increase your rates at that point. But could we do it in such a way where it's only little by little and only select where it's necessary, where it's like, like this is brutal in this market, this is brutal in this market, like not just share it to everybody just because, oh well, we lost money here school year 2023, let's just say, for example. um Instead of sharing it across everybody, let's just maybe select markets to where, yeah, unfortunately one segment is going to be affected slightly, but maybe at a 2% or a 3% or a 4%, and the other market may not have to be. It just really depends. Like I said, this is still a concept, this is still an idea. This is going to require a lot of thinking, it's going to require a lot of sitting down, thinking about it, crunching the numbers down, making sure that long-term wise it can make sense. And if that rate increase does have to happen, let's add a benefit to it, not just be like, oh, we're going to take charge you more money and you don't get anything else out of it, for example. And so that's just a concept and idea. Another thing we're going to have to address is we can't create incentives. That's illegal in the insurance industry. It's not a fair thing to incentivize clients. But if we could find something that we can do to not necessarily incentivize them, but add a benefit like a membership, if we could implement something similar to that, that could actually make a little sense. But we're going to add extra benefits, like that membership offers you perks and discounts at Disneyland, at rental car places, hotels, flights. Like they add so much benefit to it. They have a loyal customer base. I love their structure in that sense, because I was like thinking about, I was like, that structure makes sense. I like the structure. How can we revamp that model and add more to that, for the client, the benefit of the client? And that's part of the solution. And we don't want to do it where we're now doing incentives. I can't like create a pop-up right now and promote the insurance and say, for every policy you purchase, put your name in a little raffle and raffle like a, I don't know, like a Samsung TV or an iPad. We can't do that. It's illegal. It's just a small thing. Like, how is that bad? But California says it's illegal, and it's so annoying. It's just so many small things that I have to address again. And we're gonna need that legal part of it. Of if I can't find someone, I'm gonna sit down, I'm gonna read the whole thing. And yeah, I'm gonna have to pay someone, potentially to console and make sure that everything's okay, or just ask questions to the California Department of Insurance and find out, because I want to make sure that, like I said, it's something that's dawning on me, and I have to make sure that I understand what the concept is going to look like, the structure, the model, the team, the legalities behind it, how to file it, and all the paperwork that goes behind it. Because it's not just saying, oh yeah, I'm going to start a company and I'm going to sell insurance. If you don't understand or you don't know what you're getting into, if you can't present to an investor what you're trying to do, then how are you going to be able to present to the client or the government what you're trying to do? Because it's regulated, and it's a regulated industry at the end of the day, and you can't loophole yourself around it. So, you have to address that question. The solution is, let's start a company. Let's take on the industry. Let's take on these legacy carriers, because, I mean, I don't know when the last time was that these companies have changed anything really to benefit the consumer. I mean, the industry has been the same.
Like right now, at least with using these 10 minutes, is for the people that aren't like super adept with the insurance industry. And
Mm-hmm.
someone like me, I'm not like adept like you at all. Like I'm just doing my thing, and then
Yeah.
you can explain the solution, like your solution in layman's terms, so like very simple terms. So people that
Mm-hmm.
aren't so familiar with all these, buzzwords you're using and stuff. I'm sure a lot of people understand what you're saying already because you gave it very detail oriented um, explanation already. And then
Yeah.
just put it into really simple.
It's going to require a team. It's not just a one-man show. I can tell you that right now. So I know that I'm gonna have to build a team, and I have to pick the right team, and a team that's willing to share the same vision and goal at the end of the day. Because the end vision, the end goal is, this is not a short-term thing that we're playing here. This is a long-term thing to disrupt the industry. More than likely, a lot of companies are going to lose money. and some of them may want to take legal action or deter against it, or they're going to try to find methods, because if this thing really does take off and it's starting to get momentum, companies are going to lose clients for sure. And if we can provide that solution, I'm up for the challenge. If we start a company, it's with the end goal, the solution, the long-term solution to, let's make these prices on car insurance, one, affordable. Two, we need to make sure they're more stabilized. And then three, we need to make sure that we provide the best service possible. If we have to do rate increases, then we need to find a way to add benefits to it, not just charge more money and not return something else in favor to it. We should be able to add something to it. The credit card industry, they're two different industries, but they're able to add benefits to annual fees at the end of the day. So what stops the insurance industry from being able to do that? To add benefits to that rate increase. And it's going to require a lot of breaking down thought process and taking what myself and some of my colleagues know to bring it together. There's a lot of ideas, and I think if we get enough engagement, then I can definitely see another video breakdown of different videos of, like, let's say the company, what the structure of the company would look like, and then two, what the prices projections would look like, and then kind of where we would be at the benefit side of it. Like, can we add a membership based program within the insurance part of it to add more benefits to the overall service, if that makes sense. It's a concept, it's an idea. There's a company out there that currently does it. There's maybe like 2 or 3 that do it actually, but one that comes to mind in California in particular, that for those who know might have that current company for insurance, that's a similar concept. But I also want to bring some other different things from other companies that I've kind of been with to kind of streamline the process, because we also want to use a more modernized system, not just use an antiquated system because it's cheaper, but we want to use something that's also user friendly and easier, because we don't want to have delays on these kinds of policies when the system and the technology exists already, to modernize and make it easier for clients. To start a company, let's disrupt the rates. We're going to have to acquire some potential repair shops to try to understand what's going on that side of the industry, because that's influenced by the overall factors that's behind it. Because at the end of the day, when you file a claim or a total loss happens, who is fixing your car? It's not the company itself. It's a repair shop that's doing all this kind of legwork for them. And so there's another issue we have to address that's been brought up to light that we need to make sure is also kind of looked into. And so if I'm going to try to keep rates affordable, I need to make sure that I understand the repair side of that business. So I need to go out there and buy out repair shops, build an in-house network to where I can strip down the model, see what's working, see what actually is costing, a fender bender, really, what it actually costs, and see what other places are charging. Labor charge that the insurance companies agree on to pay repair shops, but there's not really part selection. Some places take advantage of it and can buy parts and then return the parts that they didn't use, because then they just go back and use and fix the actual damaged parts, and they buff it out or do whatever they can to make it as good as possible. They just reuse it and slap it on. And so, it's a super in-depth topic. It's such a hands-on, it's such a massive undertaking that there's so much stuff going on in my mind that sometimes I just can't, bring it up to wording, because it's like, wow, we have a lot to really address, and I would have to bring it in paper too. But like I said, if this video can be bring enough engagement and we can get enough of an audience to support and change it, we need something new. We're with the same insurance companies existing out there. There's nothing really new out there. No one really providing any benefits to the rate increases that we're seeing, the price hikes. My insurance went up from, I believe it was like 420 to 498, 495. So I understand what we're going through, and being on the floor side of it, like I understand. So without taking too much time and diverting to so many other topics, it's like a change needs to happen. There has to be something. Something needs to be done.